90% cash out refinance conventional loan. This is a first as of today. Literally this morning, this product was announced and launched. It's always been capped at 80%, the cash out limit on a conventional loan. As of today, October 16th, you can now do a 90% cash out conventional. In this video today, I'm going to tell you about the pros, the cons, who I think might be interested in doing this and who it's going to make sense for. Because like most loan programs, this isn't for everybody, right? 7 or 8 out of the 10 people I talk to, I'm going to tell them that I don't think it's a good idea. But for 2 or 3 out of 10, I'm going to say, you know what, based on your scenario, I think it is a good idea. And that's exactly what I want to talk about in this video. Not a lot to share, in all honesty, about the program specifically. It's a conventional loan. It doesn't have mortgage insurance. It's for your primary only. You need a 680 credit score or higher. Any mortgage broker like myself has access to this. It's UWM, the largest wholesale lender in the country, that rolled out this product. And so if you think that it makes sense to do 90% cash out refinance, I'm more than happy to help. Go to greatmortgagebroker.com, fire me an email, matt@mtmg.com. I'm happy to help. But let's talk about what I think is important for you to consider. Whether you talk to me and my team, whether you talk to somebody else, this is what you should consider. It's going to be a little bit more expensive than a regular loan because lenders price loans based on risk. If you've got $400,000 in debt on a $500,000 house, that's 80% loan to value. That's a certain level of risk for the lender. Now, if you go up to $450,000 on that $500,000 house, that's more risk to the lender. And without mortgage insurance, right, they're building in what's called loan level price adjustments for that added layer of risk. So just as an example, I looked at something, and this is a scenario that I think would make sense, right? Go with this hypothetical. You owe $400,000 on a $500,000 house. You bought this $500,000 house. You got some gift funds. You had savings. You put 20% down, $100,000. What you didn't kind of think about at the time when you spent all your savings for this down payment is that the credit card bills that you already had, and maybe you've accrued even more since buying the house, $50,000 in credit card debt is at 26% and costing you $1,500, $1,600, $1,800 a month. If you do the quick math on 26% debt, $50,000 of it's about $13,000 a year in just interest. So we're talking almost $1,100 a month in interest. If you pay a little bit of principal towards that, like you're paying $1,500 a month. Now, if you do a cash out refinance, and maybe you bought your home a year ago, maybe your rate's at 7.25%. A cash out to 90%, based on what I'm looking at right now, you're probably going to have a 7.99 interest rate. 1, this rate isn't forever. 2, 400 at 7.25%, and I just did this math, so I know it's accurate, has a payment of $27.29. 450, pulling out the cash to pay off the credit card debt, has a principal and interest payment at 7.99 of $32.94. So $570. You might pay off $1,500 in credit card payments and add $570 to your mortgage. That is going to help your monthly cash flow. It's going to help your household. Ideally, it helps you stop spending money on that plastic that is 26% interest, right? And you just get rid of that plastic. And then 12 months from now, 18 months from now, 24 months from now, your home is worth $535,000 or it's worth $540,000. You've paid a little bit of the debt off, or you refinance it at 80% loan to value, 85% even, but rates are 5.5, right? And now you're saving a ton of money, bettering your position even better than that original mortgage that you had at 7.25, owing $400,000. Those are the type of scenarios that I think this product really makes sense for. People who are trying to maximize their cash out, and maybe they're going from a 4.5 to a 6.5, going to 75 or 80% LTV. It might not make sense to do that extra 10% LTV and pay all these hits and a higher interest rate, right? But for some of these scenarios where you're paying off a lot of this high interest consumer debt, it can make sense. So again, if you want to connect me and my team, go to greatmortgagebroker.com, fill out that quick form, let me know where you're at. We cover 48 states, so we've got you covered. or send me an email, matt@mtmg.com. If you're going to do that, you might as well send me a mortgage statement. You might as well send me, hey, Matt, my credit score is about 760. Here's what I'm looking to do. I've got $37,000 in credit card debt. If you're going to email me at matt@mtmg.com, just send the info, right? Copy of your copy of your mortgage statement, guess of your credit score, and your goals, right? That or greatmortgagebroker.com. Thanks for watching. Hopefully this was helpful. 90% cash out refinance conventional loans. First time in history. I've wrote a lot of loans, never wrote 90% cash out conventional. So new product. It will help some, not everybody. Talk to you soon. Bye-bye.